Hey, what's going on, traders? Today's video, I just wanted to kind of give you guys some good free content and basically talk about how you should be taking your trades and formulating your biases based on the price action of charts, right? And not so much what's happening in the news and stuff like that, because a lot of traders get caught up in what's happening in the news and they think, oh, so let me give you an example, right? So down here, February, March area, right? Basically what happens is we have this whole pandemic thing, and this is Nvidia, right? So we see price coming down. We're hearing, oh no, it's going to be a recession, all this stuff, right? So yes, you could have made money if you had, listened to the news and got short on all your positions, and took this thing all the way down. But what happened at this point here was a lot of people started loading up short again, right? Anticipating another breakdown, right? But what happened is we actually started pushing back up, right? And then that's what people started thinking, okay, maybe this is a good place to start getting short to anticipate another move down. But again, push back up and then push back up, and then, you know what I'm saying? So that's what happened, right? A lot of people kept anticipating these moves down, but we actually started pushing up. And that's where a lot of traders go wrong, because they look too much into the news and they don't look so much at the price action, and what's actually happening in the charts, right? So that's what I want to show you guys today, right? So when you're formulating your opinions or your biases based on where you think the stock is going to go, right? You should be looking at the current trend, right? So in this time, yes, the current trend was downwards, right? This time here, right, the trend is upwards, and it still is, right? We're pushed all the way up here, and now we're at this point here. So I'm just going to quickly dive in and show you guys some stuff here. So a lot of traders don't understand this concept, and it's that trading is very personal, right? So what works for one person doesn't always work for you, because you have a different way of thinking, right? And I'm going to dive into another video like this later on, but basically I'm going to outline the psychology of trading. But what you have to understand is that it's very personal. So you need to find out for yourself if you're someone who likes to day trade, swing trade, scalp, or maybe if you're even just a long-term investor. You have to figure that out for yourself. And then, like I said, that's where a lot of traders go wrong, and they just want to copy other people. But you have to develop these things on your own, right? And that's actually something that I struggled with at first. I thought there was only one way of trading at first, and it really put this bad mindset. I had to unlearn all this stuff, because that's not how you're actually supposed to trade, right? You have to find and develop your own strategy, right? And that's how you can become successful and become a consistently profitable trader, right? So I'm just going to give you an example of what helped me, right? So I found that I have a relatively strong grasp on drawing levels, right? So I use my technical analysis to make my trades, or basically make my biases, right? So let me give you an example, right? So some people like to use Fibonacci's, some people like to use just their levels. So I combine both of mine, right? So let me show you, right? Okay, so let's say, we're looking at Nvidia here, and right, we see we made this all-time high here up at 431, right? And since then, let me draw it, we pulled back down to this 391 level, right? So basically we pulled back 40 points, okay? And then we started to bounce again, right? So this is what you would see now, right? And I have my levels here, the 23.6, 38, 50, 60.8, 88, and 100% retracement, right? So let's say, let me dive in actually on let's give you a better example here. So on the 2-hour chart, you'll be able to see this a lot better, right? So let's say you're someone who likes to take their trades based off of the Fibonacci. So you don't trade here. Let's say this is where you want to start trading, is over here, right? I mean, you could have used this price point here, right? But let's just say, for example's purpose, this is where you are now looking at your data, right? And you see that we've come down here, you drew your point, and we've pushed through this 400 level, which again was this 23.6 Fibonacci, right? And there's many different ways of trading. One trade that you could take is, if you are someone who likes to trade with Fibonacci's, right, you could take it as it pushes through this first level here, and you could close your position up here at the next level, which is the 38.2 retracement, right? Or you could close it up here at this 50% retracement, right? That's just an example, but I like to trade off of technical analysis, in the sense that there are levels that I've drawn myself that are confluent with my bias. So I'll show you that in just a second. But just to finish this quick example of the Fibonacci's here, you can see that these really do work. So once price pushes up, now this 38.2 level holds as support here, right? Then we've pushed up through the 50, which is this yellow line here, right? And we've pushed up into this golden level, which is our 61.8, and it's the golden Fibonacci level because it's supposed to be the magical level, right? You're just supposed to know that. And basically it holds as resistance, comes back into the 50, holds as support, pushes back up through the 618 and gets into our weekly pivot zone that I've made, I've talked about in my previous videos, which is also at this 420 level, right? So this one is an indicator that I made, but yeah, so this is our weekly pivot zone, right? Comes into there, that's support when price is below it, so it pushes back down, gets through there, comes into our 50% level, pushes all the way back up, and then it comes into our red zone, which is this 88.6, another strong level, right? And once again, resistance comes back down and kind of holds in between our weekly pivot zone and this 61.8, right? So this whole time that I've been outlining these pivot points, right, you could be making these trades. So you take a trade up until this. So let me give you an example, actually. Let's say you wanted to trade off of Fibonacci's. What you could do is use, let me see here. As price pushes through the 23.6 and the 38.2, right, are you going to be thinking that price is going to continue to push through the 50, then the 618, then the 88, and then get all the way to 100% retracement within this week, I guess you could say? For me, no, I'm not. I'm thinking there's going to be pullback. So what you would do is you would anticipate a pullback either into 406, let's say, which is the 38.2 level, or possibly even the 23.6. This is an example of a trade you could take, right? So once price pulls into here, right, and you see that it holds as resistance, right, on this day, you could either take this long right here on this day as it pushed through and closed above it. Let's say you took this long on this candle here, right, anticipating a push back up through the 50 and possibly targeting the 61.8, right? You know, the next day it opens up here, pushes up right into your level. You take your profits here, and maybe you let one ride, okay? It pulls back, and then you define where you want to take lost profits or take off your remaining contracts or shares, however you're trading, at whatever level, right? So if you're planning on having a trailing stop of some sort, you might push it up to this level here, this 50% retracement, right? Or you could hold it longer, right? And you hold it and it gets up higher and you can sell it there, right? So that's just an example of how you could trade, right? So I'm just going to actually show you how I actually trade, right? So I'm going to draw a few levels here with you. Okay, so I look at my intraday levels. I see there's a level down here at this 395 level. I'd even turn this white just to show that it is a strong level down here. Every time price gets into here, rejects, 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 right? Then this is going to be a level down here, but I'm going to make that just a regular intraday level, which is this purple dotted line. Right? We already have our all-time high up here, but we do see that there is some form of resistance as well up here, this 428 level. So whatever, you know, just all these levels are subjective at the end of the day. So for me, this is a level. For you, it might not be a level, right? And now we have a few levels, and let me see. I would actually put this 406 level there as one as well. Okay. So we have our levels. So let's say I want to take a trade on NVIDIA, right? The first thing you should know for NVIDIA is that we're definitely trending inside a channel, right? We're not going anywhere. We're just staying inside this channel here, right? In between here and our all-time high. So we're not going anywhere, and that's the first thing you should always know, is that if we're not going anywhere, you shouldn't really be taking the trade unless you're taking it from the bottom of the range, to the top, right? Which you could do. So let's say I saw price came down here, I made my level down here, right? And then this is today, and I know this is the top of my range up here. I'm seeing this, I see this bounce here. I see, if you look all the way down here, which is something else you could use to develop your biases, is you see this large amount of volume. It's clearly higher than pretty much everything else we've had previously, right? Probably this is the last day you could compare it to, and again we had a strong amount of volume and a push higher, right? So this could be a trigger down here. This volume, this increase in volume, could be a trigger for you to get long, especially since it pushed away with such volume, right, on this igniting candle all the way up here, right? And this could be a trigger for you to get long at the bottom of the range here, right? Because clearly what this is showing is that buyers have stepped in down here at this 395, 396 level, as they have before twice already, right? And this is the third time, and we know we're in a range. We aren't moving out. We're not breaking out anywhere, right? So this is a good area to get long, right? You get long, and let's say you're a swing trader, you're targeting the top of the range then, or somewhere near there, right? You don't always have, I don't recommend targeting the top of the range, just because, it might come exactly like this, where it did it here. And if you had gotten in at the bottom of the range here, right, and then targeted the top of the range, you wouldn't have been able to take your max profit. So you just, for me, anywhere down here in this level, especially because I made this level here, somewhere down here, I'll be targeting down here, right? But yes, that's what you do. So let's say you take your trade down here, and you're targeting somewhere up here, or even up here, right? And you set your, basically, if there's one thing that I can tell you that will change your trading, is to always set your risk before you enter the trade. Okay, so if you get in here anticipating, a push higher back up into the all-time high area up here, right? Before you even set this trade or take this trade, you define where your stop loss is going to be. You tell me, or you tell yourself where you're going to exit the trade if it begins to go against you, right? So, it could be this low down here, right? If price gets below this low down here, right, and closes below there, for me, that's what I always look for, is a close below my level, right? So once it closes, that's where I know I'm going to get out of my position, right? But it could be down here at this 390 level, or it could be, down here at this, I guess, 387 level, right? Anywhere down there, right? And I would say, okay, if it gets down there and closes down there, that's where I'm going to exit, and it's going to be a loss. And one thing that you should always know is that when you're trading, something that's also going to really help you is accepting your loss before you even enter the trade. So if you say, okay, if it gets down here, I'll lose probably $500, alright, but I'm risking $500 to make, $2,000. I'm willing to risk that, because that is how you trade. That is what trading is about, right? You risk money to make money at the end of the day, right? And without risk, there's no profit. I just want you to understand that. So you need to be comfortable, and you need to be able to risk that money to make money. Okay, so let's say, anyways, like I was saying, let's say you take this trade down here. I'm setting my stop loss down here. This is where I'm going to get out. I know this is where I'm going to get out, right? And if I had gotten in here, I'm watching, price just goes away, and it never goes against me once, right? And let me teach you, or not teach you, but let me show you something that I use, okay, when I want to build targets for where to exit from my position, right? So I made this up one day. I don't know how it works, but it just works, right? So let's say you enter here, down here, right? And for me, I'm thinking, okay, where do I want to exit? Besides all the way up here, what are my targets that I'm going to be exiting on the way up? Let's say After the first day, I find this. Let's just say this level here, which you can see, this 410 level has been some form of level in the past, right? So you set that there. Now these are your targets, right? I don't know how it works, but it just does. So let's say the first day goes by and this is where it closed, right? The next day you're targeting this area, you're going to take some off here. Maybe you want to target, the next target you take is the 50% extension, right? So you target somewhere up here, that worked, right? And then the next target maybe is this 786 or this 100% level. And yeah, you just, these become your targets. So that's one thing. If you struggle with making targets, this is something you can use to formulate targets, right? So let me give you an example of how you can also use this. So let's say you entered in short on this day, on Friday here, right? So this was Friday's price action. Okay. Now let's say you entered in short, right? You go from Friday's high to Friday's low. Now on Monday, when price opens up again, or when the market opens up again, right? We're going to be targeting, the first level is going to be 414, let's say, right? If that target hits, right, the next thing you could be targeting is maybe this 50%, right? This 410 level. Maybe if that hits, you go for this, you target somewhere in this 410, 409 level, and then if that hits, you come down here into maybe this 406 level, and then if that hits, maybe this 404 level. That's just how you can look for targets, right? And I'm interested in scaling out, right? Because that's what works for me. If you're someone who wants to just offload all your shares or all your contracts at one time, that works too, right? But the moral of this video was just that I wanted to show that the power of trading on your own technical analysis, and how you can develop these trades on your own, and how you can develop your biases to formulate your biases, right? And to how you can also use these biases to add targets and stuff like that. But this is just an example of how you can trade it. I'm going to make further videos on how I do it in the future. But yes, until then, thank you for watching. I have other videos on my channel. I'm going to be posting more, like I was saying. But basically, I do offer one-on-one training. I'm not going to be doing the Discord anymore. I think I'm just going to make a Instagram or a Twitter, maybe both, and I'll just be posting on there. So it's free for you guys, because I really do just want to educate a lot of people on, you know, how to become a consistently profitable trader, because I know that was something I really struggled with. And now that I am, I want to be able to share that with other people. So I'll make it a free resource. But if you want to learn from me personally, right, I do offer one-on-one classes, right? So it gets really personal, because I can see what you're struggling with, you know, whether it's your exits or your entries, or, you know, your fear, your FOMO, all that kind of stuff. I can see and dive deep into what is causing you to be an inconsistent trader, and we can work through how to make you a better trader. But like I said, if you're interested in that stuff, right, my email is down below. I'm going to be creating a Twitter, maybe possibly even a Instagram as well. So be on the lookout for that in the future and coming videos. Otherwise, thank you for watching. I'll see you on the next one.